Hey guys, RR Expert here. So the 4-hour candle is going to open or close on NQ in 5 minutes. And, gold as well. And I'm going to start recording now so they can see what I'm doing. So it's really tempting to go in here, but you see here, if you look down here at the time, I wanted to enter here, but it was not really close to the close of the 4-hour, So, and again, in hindsight, it's really easy to say, shit, I should have done it. But I want to follow my rules. So we're just gonna wait till this candle closes and then opens, and then see if we can participate in a scalp. So the candle is going to open now on the 4-hour here. And it seems like as if the move has already happened. So sometimes the moves happen way before the, or around the hour or 4-hour. But I just ignore it because sometimes it just makes another lower low. But let's see if the move is going to happen. So if it makes a move to the upside, maybe we can go long. And if it doesn't matter, because we're not in the trade. Because if the price would go short here, we should have entered here, because the move was created by doing this, and it's doing it again. But then you should have entered here. So for me, there is not really a confirmation for the price to go down or up. That's why I'm not participating in this move down, because for some reason, look, when you look at the higher time frames, seeing all these black candles as well. Now let's try to aim for more this time. Let me see. So one would be here. Yeah, so this target would be hit. And let me see, 2. Why is it doing this? Let me see. 3 would be here somewhere. Is this 3? Yeah. So when I aim for 3, I'm definitely going to break even, right? Yeah. So when you're doing this, you have to move your stop loss. If you're aiming one-on-one, then don't do it. I mean, you can do it if you're like this type of person who wants to have his risk management like really tight, then you can do that. But so the price went all the way to, yeah, I don't know, I think this is more like 2 something, 2.5. I'm just gonna close this because when you do the trade, you are expecting a move, So I don't want this. Even if it comes here, I don't care, And you just take the profit. And you try to look for another setup. Maybe. So what I'm looking at now is I'm looking at this, not the gap. That's nonsense. But you're seeing this tight space, here, where the price doesn't really say want to go up or down. Yeah. So that's what I'm observing. I know a lot of people don't believe in this stuff, but guys, this is all resistance here. All these bodies. So I'm not looking at the wicks, but all the bodies that you see here, here, and here. So it's really difficult for the price to just go to through this, unless there is news or any other event. But again, you see how these one-on-one trades, I don't know where I entered there, but see how these one-on-one trades, no, I don't think that was it. I think it was somewhere here. You know, one-on-one, easy. 2 as well, and we tried to aim for 3. Yeah, 3 was somewhere here, yeah. And you know, if you, and I keep repeating this, if you want to increase the possibility, you know, the probability, and not the possibility, the probability, you have to look on the higher time frame. So that's the whole idea of this concept. Just observe these open and closes of these candles. You know, I mean, you can even go to the 8 hour. You can even go to the 8 hour. It doesn't matter, guys. But observe a higher time frame candle and then try to be in as fast as possible. Okay, so when it's doing this, I'm now going to observe if maybe the price does want to go down. Yeah. And this is what you need to learn. You need to like accept all these things. An opening of a candle, the behavior of the candle. So does it make a sudden down move to the other side? Observe these kinds of things, you know, when it's kind of ranging, not really going up, not really going down. These are all indications that the price might stall here and then go the other way. And you're not going to learn this in a video. You have to like sit behind it, write your journal. This is something that a lot of people don't do. These are also the people that come to me and they fail. Yeah, these are the people that fail because they are not doing their homework. Let me see here. Yes, I'm gonna go long here. Again, just 2 contracts, you know, and let's pretend this is just $10 or $20 because we're not doing anything crazy here. So, and I can have my stop loss all the way here. So let's see if it attacks this, you know, say if it's a loss and then goes up, you know, then you might journal this way. So I entered too soon, you know. And the whole point of journaling all these things is that if you see in your journal that you're entering too soon, then now you have a conclusion that you're entering too soon. This is the reason why you should be journaling. So it's a loss now, no problem. So if it now wants to go down, then we can also journal my biases was wrong. And so now you have 2 things, you know, you entered too soon and the bias was wrong. And you write that down. Let's see. Let me see, what is this? Okay, I'm gonna enter again, but let's wait for some confirmation here. So if it goes up now, I'm gonna go long. And if it goes down, I was wrong, no problem. Yeah. So I'm gonna give an example. Like if you think the price is gonna make a move here, you can also enter here. Yeah. So and then you put your stop loss below this low here, because you're expecting this to be your last line of defense. And by doing this, you have a better entry. And then maybe you can aim for a bit more. But even in this example here, and so if you would enter here, but you would put your stop loss below these lows, so now you would have already been at 2 or 225, you know. So again, I'm not, you know, and this is not what I'm encouraging you to do. This is what I'm doing here. You're not supposed to be doing this. This is what you develop later on your own, because at some point in your journey, you're gonna see things and you're gonna understand things. You know, that's why we are always focusing on a you know, like a basic fundamental, which is the opening of the 4 hour. Yeah? So I keep coming back to that. So the opening of the 4 hour, and even again, if it hits the stop loss, it's only 150. You can see it's not even 1-on-1. Let me see what this is. What we are risking in terms of risk to reward. Yeah, so we're risking 1. Oh, let me get this good. Okay, it doesn't want to go on the line exactly, but I think you get my point. And these are, so what's happening now in this session, and these are perfect examples of, don't try to chase for these gurus who are trying to convince you that there is this model and it's perfect. This is all garbage, man. This is trading. You lose some, sometimes you win, sometimes you lose two trades on a day, sometimes you win 5 on a day, sometimes you lose 5 on a day. But if you're consistently, you know, doing your model and having your psychology in order, doing all these things, then eventually you're gonna like compound your earnings. And I mean, in my teachings, I think on average 70 to 80% I'm teaching people their psychology and risk management, and not necessarily a model. So just for you to understand what it is all about. It is also Friday. Yeah? People would then argue, yeah, but this is happening because it's the end of the week. The price wants to settle. They have all this nonsense, you know, all these conspiracies about what price is doing, you know, on holidays, or what price is doing when there is news in the week. This is all nonsense, guys. Sometimes the price does this, you know. And let's see if the price just wants to go up here. You know, sometimes you know the bias. So in this case, maybe the bias is long, but you know, you just get stopped out 1 time or maybe 2 times, and that's the game. Okay, guys, I don't want to bother you any longer. Maybe some of you are already sleeping because of my voice. I wish you a good weekend, and see you on Monday, man. Bye-bye.